Welcome, everybody. We are recording. I really appreciate all of you showing up for this. I think you're going to be, you're going to have a great hour with Steven. So we had scheduled this to be live and in person. And needed to drop back and punt on that. And so we wanted to record it because when Steven did this presentation for the Economic Development Authority, it was we had such a great exchange of ideas with the members of the authority and what Steven brought forth, that we think it'll be even better with all of you. A lot of you were on the panels and the focus groups and all of the things that we did to do the blueprint reset after the pandemic, or whatever stage of the pandemic we're still in. And a lot of you were involved in the branding, and Steven, the group that he works with, Resonance, was part of that as well. So I'm just going to take a minute. Steven's been working with us for probably 3 or 4 years now. We are incredibly grateful for all that he brings to the table, and he's just got a fantastic background. And I just want to take a few minutes to share that with you before Steven jumps in. So Steven is an expert in economic and urban development, anchor engagement, city strategy, and placemaking. He's advised and collaborated with more than 50 cities, universities, developers, nonprofits, and Fortune 500 companies across the globe to build a more creative, innovative, and inclusive community, which is exactly what we want to do in the city of Lynchburg. As an entrepreneur, Steven has founded 2 university research, policy, and engagement centers, one at the University of Texas at Austin and the other at New York University. He was responsible for reimagining engagement and brand platform for the country's leading voice, ICIC, for America's inner cities. He's the founding executive director of the LBJ Urban Lab and a professor of practice at the Lyndon B School of Public Affairs at the University of Texas at Austin. He's also a distinguished fellow at the NYU Schack Institute of Real Estate. And in addition to his academic roles, he leads the economic development and strategy practice at Resonance Consultancy, a leading advisor in destination development, real estate, and placemaking. He has more than 15 years of experience as an advisor to city, university, private sector, and nonprofit leaders in New York, Jerusalem, Vancouver, Denver, Dallas, Washington, D.C., Brisbane, the Yukon, Tulsa, Austin, Portland, Newark, San Diego, Tijuana, Miami, Sao Paulo, Monterey, Mexico City, and many others. His corporate clients include BMW, Converse, Starwood Hotels, Cirque du Soleil, Audi, Pinewood Studios, Zappos, Eden's Craft, among others. So Steven was previously the clinical professor at NYU and the inaugural director of the NYU Schack Institute Real Estate Urban Lab. Earlier in his career, he served as vice president for the Initiative for Competitive Inner City, a national research organization founded by Harvard Business School professor Michael Porter. And if you've ever seen any of Michael Porter's work, Steven also worked with Richard Florida. A lot of that work is things that have really impacted a lot of us that are in the economic development space and placemaking space, to figure out how to set our communities apart. But he's also at his core, an economic developer. So he's big on business attraction and retention and the research that goes around trying to be competitive in those arenas. So without further ado, many of you already have met Steven before, either virtually or in person, as he's done the work with us. But we are always so grateful And let me introduce Steven Pedigo.
Okay, Margette, that was like an obnoxiously long introduction, but I
Yes, it
appreciate
was.
it.
But I just wanted to let these people know the caliber of people that we bring to the table, share ideas with them. I'm not messing around here.
Well, it's good to be with you guys. I know a lot of you actually on this call. As Margette says, I've spent considerable amount of time thinking about your city, visiting your city, and really love your city. I mean, you're a longtime client of mine that I've done a lot of work with, and unfortunately haven't been back to your city since the pandemic. I had a trip, as Margette said, planned this summer, but my husband got COVID, and it was a possibility that I was possibly infected, although I never got the damn thing, which was really kind of frustrating all at the same time. So I may be one of the few Americans that haven't gotten sick yet. So even as I tried to get it that week, because I knew I'd be teaching this semester, but so hopefully I'll get back to your place soon. I am going to share my slides with you all, and Margette and Anna can share these slides with y'all once we're done with this today. She'll make sure you guys get a copy of this. So I was asked to sort of present a little bit of an economic outlook about Lynchburg, and talk about the city, and talk about what are some trends that we think are impacting urban areas coming out of the pandemic. And so as part of today's conversation, what we will do, I think, is just talk a little bit in sort of three parts. First, just sort of resetting, sort of thinking about the concept of economic development and city development. It's like, what are some things that we can think about today that we know that are relevant and super, influential, I think, in the work that Margette and her team is doing as we're coming out of the work. Then the second thing I think is that we just thought that it would be helpful just to outline some key sort of headlines. And so I think we've got like 10 headlines about Lynchburg. I know there's lots of debate in your local newspaper and other outlets about talent and business formation and how the pandemic has affected. And so we decided just to take a really quick, very high level look at data that's impacting the city. Not the region. We didn't look regionally. We looked at the city of Lynchburg, particularly. So the things we'll talk about today are city centric. And then dive into a conversation about the future of cities and what this means. And I'm open to, I know as much about the future of cities as perhaps you do. We're all kind of making some assumptions and some assessments by what we think and how things will look in the future. And so we'll talk about that. And then I'm happy to answer questions at the end. So I think I've got about 45 minutes with you all. I'll try to do this quickly and then have a chance to open up with questions. So part one, economic development today. I think that, coming out of the pandemic, there was lots of conversations about how economic development would change. Did the COVID economic crisis kill cities, impact cities, change the way we should be thinking about urban development, et cetera, et cetera. And really, I think that for a lot of us, you think about the pandemic, and really perhaps what the pandemic did for most of us was just accelerate a lot of trends that were already in focus, and maybe raise awareness to things that we hadn't thought about in the past. So, as we look at the future paradigm of economic development going forward, number one is clustering still matters. It's still important to understand your city assets and what they are, and your skill sets, your cities, and build capabilities around those sectors. I think more importantly, maybe what we have realized is that you have to be diversified in those outlets, diversified in those sectors. And so, for cities that were superly, focused on the visitor-based economy or retail, local services, they were hit much harder by the economic pandemic. Or if they were based on, construction or development, those cities were hit very, very hard. So there's a need to kind of think about diversification and still focus on these economic clusters and thinking to that for sure. Secondly, still thinking about innovation and the importance of innovation and how that plays an important role. And for you all, I think one of the things that's exciting, continues to be exciting for a city like Lynchburg, particularly the size of your city, is that you've got colleges and universities in your center. You've got a health and education services that's pretty strong, and all those play into the thinking about, what is innovation and how that plays important. I think the big takeaway for me out of the pandemic is if you think about, economic development, maybe prior to the pandemic, we were kind of inching along and thinking about the role of talent attraction and retention. But really, from business recruitment to talent attraction and retention, the shift of major cities and the economic development strategies and regions around talent attraction and particularly talent retention, as well as I think this question of the nurturing of talent. I was chatting with my colleague Laura Huffman, who is the chamber president here in Austin, and they run the economic development group for our city. And their focus now necessarily isn't as much on the attraction of talent, but is really around how do they retain talent in Austin, and really kind of how they nurture talent in Austin in terms of thinking about the continued upskilling of that talent. And so I think that still that talent-based economy becomes really key going forward. The push and pull of effects, quality of place matters more. We'll talk about that as we go along. And then finally, I think the thing that is and is exciting about our field is that if you thought about economic development prior to the pandemic, we thought, particularly as practitioners and folks that were in this space, we thought about building the most efficient and most innovative economies, but not necessarily enough about thinking about how do we build the most inclusive or resilient-based economies. And what perhaps this economic crisis has really put forth for us is that there's a need to think about inclusivity. There's a need to think about how you ensure you're creating wealth creation and job opportunities for all your residents and enterprises, as well as thinking about diversification and redundancy as it relates to supply chains, redundancy as it relates to your portfolio in your city, because resiliency being sort of that important piece of this. And the real focus, I think, around resiliency just becomes to the idea that what we've learned is the cities that had stronger, more resilient-based economies, that had diversification across their portfolio, frankly, saw very little impact from the crisis, the recent crisis, and recovered much faster. And those that were all in on maybe one sector, not diversified, really focused on local services, not really thinking about traded sector or outside investment in their cities, really felt the punch of this pandemic, and really needing to think about the importance of looking, as they look to the future, how they become more focused on resiliency, because it is really central to kind of shortening that recovery period. As I said before, talent has become the focus. I am lucky to teach at a university where I teach both undergraduates at UT Austin as well as graduate students. And the thing that always strikes me as I look at that generation and continue to now have been in the classroom for what's almost, I think, close to 15 years now, is that the students are more mobile, more tech savvy, and more skilled than ever before. And so that makes them extremely hot commodities. They now own the location decisions. Talent kind of owns the future of what location decisions will look like. And we know enterprises are making site selection decisions based off of this. And those folks are looking for a lot of things that you have to offer in Lynchburg, but it's about telling that story, economic opportunity, simplicity and commute, urban-like amenities, and then really commitment to open culture. And what we know is that investors, come to talent, go to places that have these great talent pools. You talk to, again, another Austin example. I'm working on a bit of a book about the state of Texas and economic development, and have been talking to organizations that support entrepreneurs. And there's an organization in our town called the Capital Factory. And their big takeaway, or the big takeaway headline from the interviews that I've done with those folks, is that the entrepreneurs themselves are attracted to quality of place, and they're attracted to places that have deep lifestyle and deep talent pools. And so that is, it's, capital is important, but it is about that environment and those amenities and quality of place that become a big key piece of that. And there's a lot of research that suggested that previously Endeavor has done some work around that, looking at how Inc. 500 CEOs make decisions as well. So, so keeping those trends in mind, kind of thinking about what we've chatted about in terms of diversification, thinking about the importance of talent, thinking about what, even getting to the pieces of what we'll chat about in a bit in terms of the future of the economy. Where is your city now? What are things that are happening, and what are some key takeaways as it relates to Lynchburg now? Just some headlines, maybe some talking points that maybe you as ambassadors for the city can share with others as well. Interesting enough, the city's growing faster than region. Lynchburg region, the city is growing faster than the Lynchburg region overall. So that is surprising. The population is about 4%, nearly 4% over the last 5 years. Same kind of expected job growth, population growth in the future. And so, but what continues to be, I think, a question about how we as promote our city and promote the region overall is, we are growing and adding residents, but we are not experiencing the growth that the Commonwealth overall has experienced. The Commonwealth of Virginia is growing extraordinarily fast, much of that being driven by increases in population in Northern Virginia and Richmond. But the question is how do we as a city and how do we as a region sort of tap into that? That continues to be something that we're trying, a nut that I think that I know Anna and Margette, as they're thinking about the LYH Loves campaign, is trying to crack a bit. There was job loss, obviously, throughout the pandemic, about 1,700 jobs lost over the past year, over the past 5 years. A lot of those jobs were lost in retail and manufacturing jobs. One we could submit, and there are a couple of hypotheses that we could submit for that, and again, this comes more, I think, with interviewing and having relationships with businesses. But one we know is that retail all over the country saw job loss as we came out of the pandemic. And two, for manufacturing, what we know is just automation's impact. We know that companies in the manufacturing, particularly advanced manufacturing space, are automating many of those jobs, using less human capacity to do similar type of work. And there's good things and bad things with that, right? One of the things that I think with a lot of times we talk about automation, we kind of look at automation as it relates to manufacturing is as an economic developer is perhaps a challenge as it relates to job creation. But on the flip side of that, we know that the businesses in the manufacturing space that aren't automating, that aren't investing in technology, are going to just be left behind. And so, it's sort of a catch-22. You want your enterprises to be automating and thinking about the role of technology. But on the flip side of that, we have to manage some of the job loss that comes with that. And that's a question that plays into how we think about talent, retention and upskilling going forward. There is a record number of job openings in Lynchburg, a lot of open opportunities, but nursing being the number one in demand skill. But the interesting thing that's still striking to me is just how low the labor participation rate is for the city and for the region overall. By the way, it's just not the city. The region, the Lynchburg region, has a lower labor participation rate, and so that's one of the things that is, how do we get residents and people back into the job market, thinking about that. And a lot of that is about investing in on-ramping in skills and the connections back to jobs. So there's a lot of open jobs, but again, there's just a lower city participation rate, and that there's many factors that play into that. Skill gaps is one. Fact that you have a number of college students is two. Three, that you tend to have a higher family formation element, meaning that families are, having kids and those types of things play into that. So, but there's a lot of question about how we think about the labor participation rate, partly because as we look at this over time, labor participation rates actually decline. There are less people actively seeking employment in Lynchburg. You're still a place that makes things. If we talk about, this kind of fourth takeaway, there's a lot of manufacturing happen. Your manufacturing sector is still, up, about 20% stronger than the US average. And they're really good wages, by the way. There are $78,000 that are associated with those wages annually. But as I mentioned before, we're losing some of those jobs. And so there is some job loss as it relates to that. Meds and eds, we are very much an economy when we think about the professional sector in Lynchburg, very much centered around educational and health services. Again, lots of colleges and universities, there's a healthcare anchor presence that's in place as well. And so when we look at educational services, about 7 times the US average. Healthcare is about 3 times the US average. So there are these strong base, anchor-based institutions, which are great in a sense of thinking about a resiliency going forward. All of that is to be said that, as we know, is higher education and healthcare, both as 2 sectors, are going through lots of significant changes as they think about their future as well and going forward. A lot of small businesses in Lynchburg. 95% of businesses in Lynchburg employ less than 50 employees. There are just 21 businesses that employ businesses more than 250 employees. So there's a need and emphasis around small business scale ups and support up opportunities for small businesses as it relates to that in Lynchburg. We have a bifurcated talent pool in our city. We have a lot of residents that have a BA higher, stronger in the city than in the region, and stronger in the than the U.S. overall, slightly lower than the Commonwealth overall. But on the flip side of that, there's also a fairly large number of residents that don't have any skilled training at all, that have no high school diploma, and that average is higher than the U.S. average. And so you see this bifurcated, we could argue, looking just at educational attainment, potentially a bifurcated educational attainment skill set as we look at Lynchburg. We are a young city, and I know this is something that has been broadcasted and promoted like crazy in your city, that you're a young city, and we celebrate the idea that you're a young city. Your median age is 28.3. It's significantly lower than the U.S. It's lower than the Commonwealth as well. And that, I think that accounts for a lot of university students. On the flip side of that if we look at that millennial generation, kind of those folks who are kind of in their prime of their workforce, 25 to 39-year-olds, a lot of individuals that have maybe had 1 or 2 jobs after college, or have a college degree, or that are that kind of that middle management level. We have a number that's about 10% less than the U.S. average for a city our size. And so again, young, but I think is the way to think about this, right? We're young, but the question is what happens around that sort of middle-aged 25 to 30-year-old cohort. That's super important. Robust college pool. A lot of colleges and universities, obviously, which is fantastic. There are a lot of graduates in Lynchburg as it relates to our colleges and universities, and the pipeline is growing. The key for our city, and part of the reason that I know that the city has invested in the marketing and branding communication and the efforts that it relates to destination development, is because we got to keep all those students, right? We got to think about how it's not just about educating them, but it's about making sure they can fully assimilate in our community, as well as find job opportunities and community social cohesion opportunities in community. So retention is that central key element of that. And then finally, on the flip side of that, retirement risk in Lynchburg is surprisingly low. If we look at that metric, there's a metric that MZ, which is an economic modeling organization that a lot of us economic developers buy into their data, looking at our retirement risk. We are at less risk as of now for retirement than some places our age and some places of who we are. So lots of things I think to think about in terms of where Lynchburg is today, knowledge-based economy, meds and eds, manufacturing piece that potentially is automating and losing some employment, the need to think about how we, hold on to our college students and really kind of think about the retention of holding on to that younger sort of middle boomerang or middle millennial generation that's really central to who we are. So there's a lot of positives here, but also some things for us to work on as we think about, man, our labor participation rate, getting people engaged back in the workforce is something that we must think about as an element going forward as well. Margette and Anna and the economic development team and the tourism team at the city has with all of you, resetted went through this reset with the blueprint. If you remember, we had outlined a blueprint strategy from 2018 to 2023, and then the pandemic happened and we kind of reset that. We did that and kind of focusing in on our 3 goals, and you can see how these goals kind of play into destination development and talent attraction, thinking about the focus on resiliency, and then wanting to make sure that we're obviously engaging and supporting businesses and the enterprises that we have to ensure that they can thrive as well. This, by the way, this plan is detailed and it's available on I think opportunitylynchburg.org or .com, whatever the heck that URL is. The fun thing that the city's been doing and is that the campaign around the LYH Loves campaign that a lot of you were involved and engaged with. This has been really exciting to see this play out, and the team is deploying this along, destination development efforts, small business development efforts, talent attraction efforts. I know some of the colleges and universities are now engaged in using this, and so this is a campaign that I think speaks to a lot of who we as we went through this engagement with you all, a lot of the things that you all reflected on and comments that you made about your community, and it speaks to the need to think about how we really center on engagement and inclusion as part of one of our economic development principles and our talent attraction retention principles going forward. So the next part of this deck, and so we're kind of thinking about this in 3 chapters, right? I'm kind of giving you kind of 3 little vignettes, and then, or maybe actually 4 vignettes. We talked a little bit about economic development today, some trends about Lynchburg, and then the third part of this is kind of thinking through the future of cities and where the future of cities are going. And so to do that, I want to go back and talk a little bit about history, so looking over the course of history around economic development. And so for those of us that maybe are kind of new to the space, when you think about the rise of the industrial-based economy, industrial-based economic development, the places that really thrived in the industrial-based age were those communities that had access to natural amenities and resources, right? So this gives rise to the Rust Belt, what was the Midwest, what now perhaps is the Rust Belt, places like Pittsburgh and Cleveland and Detroit and et cetera, right? Places that were the real centers and nodes because of geographical access to where they were in terms of being able to think about infrastructure and the shipping and distribution of goods. But now looking to kind of the knowledge-based economy or innovation-based economy or creative-based economy or whatever adjective you sort of put in front of that, we are now in a place where professional services, business services, the access to talent really drives ECDev going forward. And what was interesting about what is sort of interesting about that transition is that the likes of folks like Rich Florida and Ed Glazer and like Tom Friedman, if you read Friedman's World is Flat, basically said that when we think about the knowledge-based economy, no one's kind of tied to place anymore. We can kind of work remotely, et cetera, et cetera, et cetera. Right? There was this real sort of promise of being able to write your own destination. But what's interesting about that, right, is that if you go back and then sort of scale back and sort of just say, okay, let's buy that hypothesis. Did that hypothesis really play out? Yeah, the answer to that is it's not so much. That in fact, even as there was concentration in the industrial-based age, there was even more significant concentration in the knowledge-based economy at the time, recently. So in 2016, if you look at the US economy over just looking at GDP makeup, there are 10 places across the country that really dominate this, right? And some places being larger than others. And so, the economy isn't necessarily as flat as we thought the knowledge economy would be, but in fact, it was quite spiky. But, and to build upon that effect, you look at, there's studies that others that looked at, not just looking at GDP output, but then looked at the innovation-based economy. And there's a great study from Mark Murrio and his team, and Amy Liu and others at the Brookings Institution at the Metropolitan Program at Brookings, that looked at the overall growth and scale of the innovation-based economy, and really found that when you look at the innovation-based economy from over time, is that 5 cities kind of really accounted for almost all of the job growth, 90% of the job growth, and then to build upon that effect. When I was at New York University, we did a study with the Center for American Entrepreneurship and my colleague Ian Hathaway. We looked at startup VC capital, and what we found, again, the same thing: startup VC capital across the country concentrated in a handful of cities. The Valley, New York, Boston, and then some Seattle, and then some of these emerging technology baby cities like Austin and Denver and other places, but mostly concentrated in these big cities. But as that's happened, right, over time, and we concentrate in, and you build these innovation-based clusters, you build all those things that economic development officials want to do. They want to build business formation, knowledge-based economies, all those things. Those cities actually are those what we would quote as superstar cities. Essentially, start to see high cost of living. They themselves start to face what we call the affordability crisis. There's differences between the have and the have-nots. The left end of the tail of the distribution curve becomes much more removed from the rest of the economy. You see larger gaps, and so with that, some of these superstar cities start to see a decline in population. And in fact, what we all read the headlines and continue to read the headlines is that the pandemic really accelerated that, right? That over the last 3 years, if you look at places like Boston, San Francisco, Chicago, all of the quote unquote superstar cities, these places have lost a lot of residents. They are bleeding, they're bleeding talent. And a lot of those folks are making exits for smaller communities like Lynchburg, like Richmond, like Charlottesville, like Austin. And so there has been this rise of the rest, so to speak, and this increase in smaller communities across the country. And much of that being interesting, that much of that has been really driven by the rise of remote work, right? And so as we think about, economic development in the future, much of the work that Margette and team at the Office of Economic Development and the Regional Alliance were focused on were enterprise creation, right? The idea of investment from outside firm into community, or more importantly, expelling and scaling of those current firms. But again, coming back to this idea of the changing sort of landscape around development, is that now we're about talent. Talent attraction is even more important because we present this question of remote work. And so, even as we return back to the office, and there is a return back to the office, we can look at the data to suggest that there are a lot of trends, that there are a lot of data points that would suggest to us that the return to the office, it will not be what it was pre-pandemic. And there are a couple of data points to point to that. One, study from ladders.com. There's studies from LinkedIn. You could look at the LinkedIn report, employment labor reports that those organizations have shared. And there is an estimate that 25% of all professional jobs in the US are going to be remote by the end of the year, will be fully remote, and that those are going to continue to increase. The other piece to add on to that is that there is estimates from, Adam Grant and others who have looked at this, who suggest that in addition to the 25% of jobs that are fully remote, 1 in 4 jobs now fully remote, most of us will spend a day and a half less in the office than we ever spent before. So we're going to spend 20% of us will spend another day and a half outside of the office. And so you start to put that together, the implications of what that means for downtown commercial office space, what that means for the way we think about the way we thought about enterprise creation and development, raises interesting questions for the future. That still plays, and there's some data points now that we can look that kind of illustrate this as well. Over the course of the summer, there was a report. I think it was a report from CBRE that had looked at commercial real estate vacancies and return back to the office. And it was a study. It was a report that was done, I think, by the Wall Street Journal. The Wall Street Journal actually, I think, did the exclusive report on it. And even in the highest markets, where I said in the highest market, I live in Austin, Texas, we have had the fastest return back to the office. Houston and Dallas, right behind us, Texas has kind of embraced this. Even in our markets, we're still just sitting at 50 and 60% occupancy rates back in our offices. And in places like New York and San Francisco and some of the superstar cities, we're talking 30% occupancies. And so this raises big time questions about the future of downtowns and the future of the way we think about placemaking and the future that we think about how we have to recalibrate the way we approach economic development in the future. And it raises an interesting question, does place still matter? Is it the death of cities, or is it kind of this new beginning? Which gets us to a focus about reimagining what downtowns could look like and how we think about that. And so to that end, with the rise of remote work and this lack of return back to the office, there's also been this extreme spike, frankly, in business formation, in entrepreneurship. And interesting enough, there's a lot of talk about the Great Resignation. You hear the Great Resignation over and over, and labor shortages talked about. But on the flip side of that, what we know is that there's been this significant spike in business applications too, playing into this as well. And my residence colleague, Amnea Phenomeny, who is our economist, went through into this interesting catalog of all of the business application data. And it's pretty striking. You can see that over the course of the last few years out of the pandemic, there's just been this extreme birth of entrepreneurship, and more so than we've ever had in the past, actually, even way more so than the 08-09 crisis, right? Typically crises are a time of innovation. They're a time when we see this, but nothing like what we saw out of this pandemic as well. And interesting, it's kind of added on to that, is that a lot of those business formations haven't just been in professional services, but it's been along an array of different types of enterprises. And if we look what's happened in Virginia, for instance, Virginia the Commonwealth has seen a significant number of those formations as well, about 66,000 of those applications as well. And so, it is, as we think about the future of cities and what that means for cities, we start to put pieces of this together that starts to raise maybe a framework by which we think about economic development, destination development differently. And that is with, the rise of remote work, the acceleration of the talent-based economy, the focus on the spikes in entrepreneurship. There is the other piece of this is that there's been a large increase in domestic visitors again. So America is back to visiting. You hear this across the country. You hear this when we look at visitor data. And so while the typical office trip is down, there's this big boom in visitation across cities, and there's a lot of good data about that. And look at Lynchburg, right? And so we looked at Lynchburg visitation data. The visitation numbers for Lynchburg is off the charts. So people are coming, experiencing weekend trips, thinking about office trips differently. And you see this playing out even in your city as it has done in other cities as well. So a large increase in visitor traffic, which gets to this question, like, as we think about the framework for development going forward, there's probably a new type of visitor economy that's kind of helping to push us forward, which is, a place that is not just a traditional destination for that traditional sort of 9 to 5 business environment, but it is a place that is embracing kind of education, a place that's becoming a center of entertainment, a place of entrepreneurship, which gets back to this question of, like, as we have traditionally thought about, development in communities, we kind of think about it in this 8 to 5 type of format, but really maybe it is time then to think more about this sort of 18-hour city development. What does a city look like, and what are the functions of a city, and what are the functions of a community from sort of, mid-morning to midday to the evening, and what does that transition affect, and how does that look like in terms of different placemaking efforts that are needed as well. All of that is to say, there's a lot of opportunity for reimagining the new use of commercial space, unused commercial space. It's about the idea of needing to think about how we support a remote work ecosystem. As you all, Lynchburg is thinking about how it's attracting remote workers. We are not going to all work from our basements. We're all not going to just work from an extra room in our house, that we are going to want to have an ecosystem that kind of supports that. And so that's that's maybe an opportunity for the rise of new co-working spaces, new social clubs, new third spaces in a city. So there's a lot of opportunity here as well. So all of that is to say, to think about, like, how we reimagine it. And I think this is what we've been thinking about with Margette and Anna and others on the economic development team, is just this new way of thinking about destination development, right? Destination development is not just about tourism, but it is about the attraction of new type of enterprises, entrepreneurship. It's about talent, attraction, retention, but also visitor attraction. And then also just creating a great place that you can build that stickiness for so many of those students that you have in Lynchburg, at your colleges, at the University of Lynchburg, at Randolph College, at Liberty, and others, to make sure that we can try to hold on to those students. Really quickly, I just want to hit on some key trends in a sort of rapid fire to think about, and maybe to spark conversation and discussion about cities going forward. So, in addition to this kind of reimagining destination development, what are other things that we should be thinking about as well? Here are 10 ideas. One, startup nation. Again, we've already talked about this. I think startups, and just looking at the fact that 8 in 10 businesses in Lynchburg have less than 20 employees. 95% of business have less than 50 employees in Lynchburg. Small business support, small business creation is super important, right? And we want to continue to think about that and the role of that going forward. So that's number one. Number two is we're hearing a lot about onshoring and nearshoring, and the idea of supply chains. And so what is that the impact for manufacturing going forward, particularly for suppliers, particularly for a community that has such a large manufacturing base? That's something I think we as economic developers who are thinking about Lynchburg's future has to really take a hold of. And then also just like, there's a lot of opportunity that's going to come along with, even if you disagree with the federal legislation, the CHIPS Act, the Inflation Reduction Act, the Infrastructure Investment Act, all that playing into lots of federal dollars and a lot of EDA dollars that are going to be centering around this question of supply chain resiliency and manufacturing resiliency. And so there's some opportunity for us to think about that as it relates to our city as well. The rise of remote, keep in mind, our millennial workforce is 10% smaller than what it should be for a city our size. How do we play upon the rise of remote and use that as a way to leverage and get more young, talented folks thinking about Lynchburg as a place to live? Rise of remote the rise of the rest, we know that's happening. How do we get our piece of it, right? That's a key piece. In fact, Anna was saying to us before we got on, if you've watched the U.S. Open, you see that a city that's going all in on that is Asheville. They're making a lot of play in advertising, marketing campaigns, understanding that that the rise of remote is super, super important. The rise of the rest, and there's an opportunity for this talent attraction piece. And as my city like Austin, Texas becomes more expensive, and the Denvers and the places that were kind of the under the superstar cities, but the kind of the next, but the affordability advantage that my city has had for such a long time is gone. It's been gone for a while. It creates greater opportunity for some of our smaller cities like Lynchburg to make a play there as well. Quality of place, visitor traffic suffered. We want to make sure we're continuing to talk about destination development and promoting quality of place, and being very specific about the way we think about tourism development going forward. Tourism, old school tourism doesn't work anymore. It's not frankly, it's not just a good use of dollars. We got to think about that. We got to think more broadly about destination development, and that ties back to quality of place. 15-minute city, how do we think beyond the downtown of Lynchburg? How do we think about different types of investments, about different cities in different neighborhoods throughout the city and throughout the region, ensuring that we're talking about the city as a collection of cities, not just a continued focus on the urban core. The reality is that fun fact out of the U.S. Census, you can share this at a cocktail party. If you're at a cocktail party, is that we as Americans tend to think we are more stressed out than ever before. We have little time than we've ever had. But in fact, the recent survey out of the U.S. Census, the 2020 census, actually suggests that we actually have more leisure time than we ever had. That leisure time since the 1960s has continued to increase, and it actually has increased with this recent decennial census as well. And so that is all about experience-based economy. And what does that mean? And how do we think about experience-based economy and the types of assets and types of placemaking initiatives that we are offering throughout our city and throughout our retail development and those types of things? We face a labor shortage. Doing all that great stuff is great, but there is a big labor shortage across the country. And a lot of that labor shortage can be tied to the boom in entrepreneurship. Perhaps that's one hypothesis or one reason. But also there is just in our city here in Lynchburg, we've got a lot of people sitting on the sidelines. We got to figure out how to get them back get them back engaged in the workforce. And so, that is everything from maybe service-based economy jobs needing to maybe offer better opportunity, to the idea that we got to be better at our skill assessments and helping to create on-ramp programs. Again, talent-based economy being the focus, and how do we leverage that? Two last points, and then we'll stop and open it up for questions if there are questions, and I hope there are discussion points. As I said before, equity and diversity and inclusion are centrally important. Since the George Floyd murder, and looking at the inequalities and challenges that the pandemic really sort of shined a light on. I mean, those are something it is prior to the pandemic, a lot of cities maybe have thought about inclusion and diversity, DEI, in their economic development strategies as a nice to have. It's very much now a need to have. And in fact, site selection consultants and talent is putting a big play on this. I presented on Tuesday at the Texas Real Estate Conference, and the speaker that spoke after me was a site selection consultant helping to make a lot of large scale site selection decisions. And one of the things that he talked about in his remarks as part of talking about the state of site selection being how companies make location decisions, was that now site companies are asking cities about their commitment to diversity, equity, inclusion, and what they are doing. It has now become a site selection location factor in terms of that checklist. And so that is super important as well. And then finally, decarbonization. 7 in 10 millennials say that climate change is a priority for cities. So it's a talent piece of this. But as you look at the opportunities that are going to, there is an immense amount of economic development opportunities that are going to be coming out of the Inflation Reduction Act as it relates to decarbonization, electric vehicles, battery creation, thinking about new infrastructure in cities. so that creates opportunities as well. And maybe it's a trend that we should be thinking about going forward for Lynchburg as well. And what I think is super amazing about your city and interesting about your city is that you also have this real strong nuclear technology sector who's thinking about energy differently and has been for decades. And so using that as an element of storytelling as it relates to what the city of Lynchburg is doing and what the city of Lynchburg has as it relates to decarbonization is something to promote as well. So with that, I'm happy to, I'm going to stop sharing my screen, and if there are questions, we can take those questions. And Margette, I'll turn it back to you to moderate that.
That was a lot. That was economic development trends and all kinds of things. So I hope you found that
It was a mixtape.
And please feel free to ask any kinds of questions. Steven really went over. I don't think there's anything he went over that doesn't touch everybody I'm looking at right now.
Looks like Adam, you have a question. Go ahead.
Yes, thank you. Thanks for that presentation. It was very informative. You talked about professional services and unskilled labor. I wonder if in your research, did you look into any data or find any interesting data on skilled labor, trades, construction, all the things, all this development in Lynchburg that's happening is highly dependent on these skilled laborers that seem to be in very short supply. So I wonder if this has been examined and what kind of strategies we have for developing those skills.
Yeah, I mean, it is. So, I think the one takeaway when we think about skill, the challenges around labor development or talent development or sort of is that in a lot of places, economic development and workforce development still are fairly divorced from each other, right? They operate in different spheres. Regional and colleges also kind of operate in different spheres, and then you have the economic development folks operating in different places, right? So, economic development officials are working with workforce with employers which are saying we need these types of skills, and then you have workforce developers that are saying we are trying to engage with our employers but not actually moving the needle anywhere. There are some there is. And so that creates a pretty fragmented way to think about the idea of talent attraction. And so one of the things I think that is maybe not necessarily sort of empirical research about this, but there's a lot of places that are now moving to create better ecosystems as it relates to doing that work, which is getting, colleges, universities, workforce developers, and economic developers around the same table to think about how they are thinking about their talent on their talent training and training and upskilling in a more cohesive manner. And so, places that I think there are a couple places that I think are kind of doing that pretty well. There's great work that's happening out in a place like Portland, Oregon's doing some pretty good work around that. I think that my city here in Austin has made a lot of strides around that, particularly with the role of the community colleges. Another place that I'd point to who's done substantial work on that, led not through an economic development or city perspective, but really led through the community colleges, is out in Tucson, Arizona. Pima College has done a lot with that, and they've been the force to do that. And so there's a lot of best practices out there about this. And I think it is now, again, it is this paradigm shift by which we think about what's the role of an economic developer, right? Is economic developers, is that role solely just about, attracting investment and FDI and making the enterprises scale? Or now is the role of economic development to be more comprehensive in its approach and focus back on ensuring that the workforce development programs and the workforce development community and the universities are all on the same page in terms of making what that ecosystem works, right? So I think there's some new approaches out there that have been raised by this, and so I'm not sure if I answered your question in terms of saying data trends, but these are kind of some of the things that I think we're starting to see is just more comprehensive thoughts about that. In fact, if you look at the 2 weeks from now is the IADC conference, the International Economic Development blah 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 conference. Much of this is around trying if you look at the agenda, a lot of the agenda is centered around trying to get best practices and uncovering mechanisms and mechanics for how to do that.
I think another really important piece of all this is that by the time they get to community college, you've probably lost. So it's got to start in public schools and having a much closer relationship. Adam, I know you and Elise work with Lynchburg City Schools and other schools. I think Steven's data that says 10% of our folks don't have a high school diploma. You start to look at, where those gaps are. So, workforce development to me gets kind of whirled up into a frenzy when you get to community college, but it's too late. I mean, you've lost a lot of people by then. So I think our community college is really trying to, as many are, to do wraparound services to really help folks see themselves in community college, to make that transition from high school. I know Beacon of Hope is on the call, and they are really trying to grab the kids in school there. But I mean, it's going to take all of us, at the table, and that table may not directly back, it's kind of a circuitous way, but Adam, may not directly relate to what you were saying, but we may not be priming folks up to go right into the businesses that we have here today. We might be priming folks up to entrepreneurially go out on their own. We might be priming folks up for me to be able to attract new sectors to this community for all of that, because I think a lot of times, I know for me, workforce is always an issue when I go out to talk to the businesses, and all the workforce people and everybody else tries to clamor around and address the issues at hand. By the time we think we've got it settled, the company's moved on and they had a whole nother set of issues. So, everybody's got to be at the table. The business has got to be at the table to say, if you hand me someone that's got a reasonable set of skills, I'm going to take them through my process and help them become a great employee. For me, we're not always going to be able to deliver everything that you're looking at. We also have to understand, and I don't think anybody's made this, jumped over this hurdle, the trades. If you are a plumber or an HVAC or a woodwork, if you're any of those things, you're in the same line with a doctor. You can chart your own course in terms of starting a business. You can do some really from a wage perspective and from all of that, you can do some really amazing things. The trades should not be where you go because you can't do anything else.
Yeah. The last thing I would say about the workforce ecosystem, I think the other thing that's become really apparent is that you have to have the wraparound services. Right. So wraparound services now are not just, it's not just about enough to provide a skill training program, but there's got to be really good mentorship. So cities are investing in, mentorship programs. So for instance, even around, I'm working in Greenville, South Carolina right now. One of the things that they've done really well, I think, is build out a mentorship. We think of mentorship programs just for white collar jobs, professional services or entrepreneurship. They're actually doing that now in their manufacturing sector. So mentorship is super important. Childcare, for God's sakes, we know that is defined. There's a ton of folks that have written about this. My colleague Vicky DeSoto, who is now the dean at the Clinton School, did some work about this in terms of looking at what she called the she economy, and the reason that we look at labor participation rate for women, and particularly why it was so high in the pandemic, was because there just wasn't childcare opportunities. And if you're trying to get more folks out to take a part in your skill training programs, you have to think about the wraparound services of that. And so that means investing in childcare as well, and thinking about that. And so now actually some workforce development organizations are doing that. I know, interestingly enough, in Texas, we do a lot of things really bad, frankly. We do a lot of social support services really bad, or don't do enough of them. But the one thing we do pretty good here is around our workforce development initiatives and ensuring that childcare is tied to them. And so that's another thing that cities should be thinking about in economic development. That ecosystem is that it's just not about having the training program from high school up to college, and then colleges and universities thinking about micro badging and all those types of things, but also those wraparound services. The final thing I think that's interesting is to see a lot of universities, right, reimagining what their products and services are, as well. So, colleges and universities doing this. I know that you all are, some of your colleges and universities are thinking about this, different types of credentialing, and how we think about credentialing is going to, I think, be significantly changing. That's not to say that resident degree offering will change. I think that still won't be as important. I still think that will be important for some folks, but being able to get the types of skills you want in a different way is going to be a different thing to think about, perhaps.
We've got Allison had her hand up. She may have just, oh, there we go.
I was just about to leave. I've got another appointment, but thank you, Stephen, for that information. I'm Alison Morrison Shetler. I'm the president of the University of Lynchburg, and a lot of what you and others have said really resonate with me. Our new strategic plan is called Reimagining the Lynchburg Experience, and it's looking at getting people from middle grade school all the way through to come to this campus and to get some experiences that set them up for success. So we are a comprehensive university grounded in the liberal arts. And I hear so much about people saying, the soft skills of the liberal arts. These are not soft skills, these are essential skills and the kinds of things that will set people up to be successful. And so what we're doing is engaging young people on our campus to learn the kinds of team building skills, the essential skills of the liberal arts, even before they think about going to college, because if they have those skills, then they're really going to be set up for adaptability in their future. And then the final two other things I would say is the curriculum that we have, and I would say the other colleges in Lynchburg have, is the ability to get our students into places to have experiences. So a lot of the nonprofits, a lot of the businesses have our students in there early on during their career at the colleges to get the kind of experiences. And invariably they are hired after they've been there and they stay in the area. So the percentage of students that stay in the area from the University of Lynchburg is very high. And I'm just, so I think that the thing that you've already said, but the key component is getting people early, getting them onto a college campus, whether it's CVCC, Liberty, Randolph, Sweetbriar, University of Lynchburg, doesn't matter, but getting them onto the campus early so that they can see that their trajectory is through education. And it doesn't matter what education that is, they just have to stick at the education.
Yeah.
So
it's about thinking about the community. I mean, so I'd love to chat with you again, President, but I think it's about thinking about the idea of the community, the university as a hub for community, right? That it's not just for the 4-year, that 1 4-year entry point, but it's saying, okay, how do you think about your college campus as a community hub for, middle school, high school students, where it isn't a foreign, quote unquote, experience for someone when they're thinking about what the next steps are, right?
Absolutely. And I'd love to talk to you more about it. I was in Asheville and very much involved in economic development through the Western Carolina University with the Asheville community. And that's what we did. We taught people from, we engaged people, I would say, from the age of, 5 to cradle to grave, I suppose. And it really made a difference in the economic development in Asheville. And some of you have already heard me say this, and I'll say it to those that don't, but the University of Lynchburg is Lynchburg's university. And that's the way I see it. We are not just here as, a piece of the community. We are the community. We are part of the community. And that's how we influence folks. And I think we do that. All of our educational institutions do that really well. So.
Yeah.
But thank you very much. The information that you provided me is great, because I will start then incorporating that into my speaking points about Lynchburg too. So thank you.
Great. Cheers. Looks
Any
like we're
other
done.
questions? I actually have one question, Stephen, if you don't mind, if you'll indulge me. You talked about small business and small business scaling and how we as a community, the whole community may be able to think about that. You know, given the statistics that 8 and 10 and 95% are under 50. You know, a lot of people think that that is just, you know, we must have venture capital funds, we must have investors, we must have accelerators in place. And I was wondering if you maybe could talk about what role other types of organizations can play in small business development, whether that's through procurement,
Yeah, I mean,
or,
yeah.
you know, buying locally, that kind of thing. Just some of those strategies that we can all have a piece of that. It's not left up to someone else.
Yeah, look, I mean, for a place like Lynchburg, your small business strategy or entrepreneurship strategy is extremely different than a place like Denver or Austin, right? It's not going to be a VC strategy, just not. It's just a different type of businesses, right? A lot of the businesses, that's not to say that we're not building businesses that are going to scale, but a lot of them are not going to be, a lot of those specialized technology businesses are very much attracted to places that are thick in VC. So that means our small business support program has to be different. It's through mentorship. It's through offering the right technical services planning. It's trying to get our anchor-based institutions to think about, and the city, for instance, and major employers to think about how they use their size and scale and their procurement to create contract opportunities for entrepreneurs, right? You know, the big thing I think for cities like Lynchburg is that when you look at that 8 and 10 people are employed, 95% of your businesses are small businesses. That also means that a lot of those businesses over time are going to age out, or they're going to need they're going to be sunsetting. And so just basic succession planning is going to be critical for a place like Lynchburg. So I think it's a different type of suite of services and a different type of an approach. But it's also not, you know, I think a lot of small communities will then take this idea, well, we're not going to be a startup or an entrepreneurial hub. We're not a big city. They kind of push that off the table of their economic development strategies. But, you know, that's not an effective approach for a place where you have most of your employment base is small, medium-sized firms. And so that commitment to those resources are super important.
Thank you.
Sure.
Okay.
Well, great. Well, thank y'all. I really appreciated the opportunity to share what we've been working on. And yeah, so thanks, Margette. Thanks, Anna.
You're welcome. And we'll send the presentation out to you all, to everybody. And, you know, we're always open for you all to come back and give us what your thoughts are from your organization or from your perspective, as to how, because I think the more of us, even if we're talking separately to different audiences, that all comes back together. And if we can start talking about, I think we've all seen, you know, with Winter coming to town, that he has only been here for a year, but he's made quite the impression by grabbing onto some really salient points and repeating them. And so that's one of the reasons why we asked Steven to look at trends for cities in general, and then to bring all that back to, you know, what does Lynchburg look like, or what could we do in that space? So all of us know individually, we usually never have enough resources to adequately address the need, but I think all of us together and each person playing a part in that, and all of you all are really very, very important to the city, can really, you know, move things forward. And we're going to need to do that because, you know, the world is changing. The effects of the pandemic and what's gone on in the world are not over. I think our manufacturing sector is phenomenal and has been here for a very long time, but things in that space are changing, both good and bad, meaning we could get things coming back from overseas to be relocated here and be a player in that arena. But we also can see companies that don't have their headquarters here making, you know, other decisions or having to do other things. Same thing goes with the financial sector. A lot of those people working from home. The owners of those businesses feel like that they really can't do anything else but allow that to go on because they don't want to lose all their people at once, but there'll be shifts in all that, how it settles out, who'll be coming back, what do we do with commercial space, how do we reimagine all of that so that the city remains a vibrant place for people to start a business, to, you know, go to school, and to just, you know, live a great life. So really interested in your feedback from this. And if you spend a little time with the presentation, if you got anything else, I hope you all know that you can reach out to us at any time, and Lynchburg loves you.
Thanks, everybody.
Thank you.